The federal budget was handed down a number of weeks ago, and there has been some toing and froing over what is in and what is out. Tomorrow is the start of the new financial year, and a time when some of those new budget measures will kick off. Are you confused about what actually will change tomorrow and how it might impact upon you? Olivia Maragna is a financial advisor from Aspire Retire, and she's helping us wade through some of the changes. I asked Olivia how much will be changing as of tomorrow.
Well, look, there's a lot that's changing 1st of July, so tomorrow, but there's also a lot that's not yet passed through the Senate. So it's really important to understand some of the key measures. So there's 5 key measures that I think will affect a lot of people. And then what we'll generally see over the next sort of month or two is a lot more of this changing. So we're still, just keep in mind from the federal budget point of view, there's still a lot that's still in the air, we haven't even seen the legislation for a lot of it. So it'll take a little while until it gets through.
All right, well, let's have a look at those 5 areas that we do have some substance on. If you earn over $180,000, the individual tax rate is going to change from tomorrow.
It is. So this is the temporary budget repair levy. So this is effective tomorrow. If you do earn over that $180,000, you will be paying that extra 2% tax. So employers need to make sure that they're obviously updating their payroll and all their sort of systems that they're using to process payroll to make sure that that takes into effect. Now, this is something you'll see extra money withheld from your tax, or you'll see it at the end of financial year through your tax return.
There are also some changes for tax offsets. How will they affect the average person?
There's a couple that they're looking at abolishing. So from 1st of July 2014, don't rely on the dependent spouse tax offset or the mature age work tax offset. So they're the ones that they're looking at abolishing. Again, not anything that you need to take action on, but you'll actually see that in your tax return when you lodge it after the end of financial year.
What about the Medicare levy?
Well, this is one that's generally going to affect everyone. So an increase in Medicare levy from 1.5% to 2%, starting again tomorrow. Something that, we will see a little bit of a change from a pay point of view. So there will be extra Medicare levy taken from people's pay packets each fortnight, week, month from that point of view. There is a low income threshold, so those who are earning low incomes won't be affected too much by it, but majority of people will. So that's a big impact from 1st of July.
Not something that we have to change, that should just automatically change as far as our pay office is concerned.
It will, yeah. So like I said, just keep a really close eye on your pay slips. You'll see some slight changes there.
Now that's an increase to the Medicare levy, but the surcharge is not increasing. What's the difference?
Surcharge is different. So a Medicare levy surcharge is something when you don't have hospital cover. So really important, particularly 1st of July is usually the changeover period for health insurance. So if you don't have hospital cover in place already and you're over the age of 31, you will pay an extra loading on your premium. Your Medicare surcharge is when you earn a lot of money and you don't have that hospital cover, the government ends up charging you an extra amount of tax. So really important, if you are earning those good incomes, make sure you're talking to your accountant. Am I getting penalised with Medicare levy surcharge? Because that money could be used towards actually going towards some hospital cover or even just some basic cover to help reduce that level of tax.
You're listening to financial advisor Olivia Maragna on 612 ABC Brisbane and ABC Sunshine Coast Drive. We're going through some of the main changes that will swing into play tomorrow, the 1st of July, when it comes to the impact of the federal budget on our lives. Olivia, there's going to be a difference to the superannuation rate. It's going up.
It is. So this is a good thing for, I guess, employees. 9.25% is the current super guarantee rate. That increases to 9.5% tomorrow. Now, really important from an employee point of view, make sure you're checking your pay slips over the next coming weeks because depending on how you actually do get paid, you will see adjustments in there. So say, for example, if you just earn a base salary and super is paid on top of it, you'll see that extra money is going into your super, which is great from a retirement point of view. If you're on a package, so that means your package has been negotiated in its total. With this super guarantee going up, you might see your pay going down slightly from a cash point of view. So really important to make sure you're checking your contracts, what's included, check your pay slips over the next sort of month or so to make sure that it's been accurately recorded. From an employer point of view, again, really important that you have the right systems in place. So whatever you use to process your payroll, so the accounting software, make sure that you're getting those updates done fairly quickly because that is going to impact on your payroll.
And if you're the employee, what should you do if you haven't noticed any differences on your superannuation, on your pay packet after tomorrow?
Well, you should definitely be talking to your payroll. So, depending on when your first pay period is, if you're not seeing those changes, definitely have a chat to your payroll department. If it's a small business, have a chat to the boss just to make sure that everything has been recorded correctly. Keep in mind your superannuation, so the actual superannuation itself doesn't generally need to be paid at the same time that you get paid. So keep in mind, a lot of employers only pay it quarterly, so at the end of the quarter. So what you're seeing on your payslip, obviously making sure that the correct amount actually hits your super fund each and every quarter is really important.
Okay. Another change we should be aware of as of tomorrow, that will be differences to the age-based concessional superannuation caps. What does that sentence mean?
It sounds complex, doesn't it? So concessional contributions are contributions that go into super where you pay the 15% tax. Now, contributions that are catered for this is employer contributions, so your super guarantee. It's also if you're salary sacrificing, to give you an example. So if you're getting close to retirement, you're putting extra money into superannuation, that counts towards that cap. Now, previously that cap was $35,000 if you were over the age of 60. Under that age, it was at $25,000. What's happening as of tomorrow, if you are over the age of 50, that cap increases to $35,000. So a great opportunity for people over the age of 50 to consider increasing their salary sacrifice where it makes sense for them to. So I always try and explain concessional contributions. You pay 15% on the way into superannuation. So if your marginal tax rate personally, so you forgo a bit of your pay where you could be paying, say, 30-40% tax, you're putting into super, you're only paying 15% tax. So makes sense in that scenario. Contributions as to how much you can put into super are going to increase as of tomorrow. So talk to your advisor, make sure that it all makes sense for your particular circumstances. And then for everyone else, the contribution cap is $30,000, so previously $25,000. So really good incentives from the government to increase those caps.
So that's concessional superannuation caps. What about non-concessional superannuation caps?
So again, complex terminology. So non-concessional caps, to put it really simple, is money that you put into super that you've already paid tax on. So you're not getting a tax benefit where, you're saving your marginal tax rate and putting money into super. This is just money that is hanging around that you put yourself into superannuation where you're not claiming a tax deduction. So currently, as of the 30th of June, you can put $150,000 per year into super. Those caps are going up to $180,000 per year. For those who do have substantial assets outside of super that they want to get into superannuation, you can do 3 years at once. So currently the cap's $450,000 for a 3-year period. It's now going up to $540,000 as of 1st of July. So really important to keep a note of some of these changes, particularly if you're looking, fairly close to retirement.
You're listening to 612 ABC Brisbane, ABC Sunshine Coast Drive, and Olivia Maragna is taking us through some of the changes we will notice from tomorrow with the new financial year coming through. But a lot of what was mentioned in the budget only a couple of weeks ago you haven't covered today. When are we likely to see some of those changes?
Yeah, look, there's lots of little changes that are sort of in the pipeline or little changes to indexation which will come in. The majority of what we've actually heard through the budget, we're not going to generally see that passed for a few months yet. So really important to obviously make sure that you're budgeting personally, knowing that there are going to be potential changes coming, but make sure that you're aware, when they're actually coming in. So I'm happy to pop back in a couple of weeks and go through those sort of things.
Yeah, because one that just springs to mind is the family tax benefit. Mooted changes in the budget, but we're not going to see any of that tomorrow. This is all still before Parliament.
Yeah, there's lots of little changes even around indexation that we'll see. So there will be some changes just around some general, sort of areas, indexationing some of the payments, but a lot of it we're going to see more changes over the next couple of months. So really important just to keep an eye on those. You will get notified for changes of payments as well, particularly from a Centrelink point of view. So just keep an eye on that and make sure that you're aware of your particular circumstances and what changes.
There have also been mention of changes to fees and fee structures for entering nursing homes. In fact, there's quite a bit when it comes to aged care.
Big changes.
Will any of that kick in tomorrow?
Yeah, so look, there is some changes to aged care. So basically the whole area around aged care is quite complicated. So we will talk a little bit more of that in detail in a few weeks' time. But basically the whole intention around the changes around aged care is if you have that capacity to pay more, they're wanting you to pay more. So there's going to be some income tested changes around your fees and all sorts of things. So complex area area, particularly if you are in the process of maybe putting your parents into aged care or you're looking at aged care yourself. Lots and lots of changes, so make sure you do seek advice about that. If you're already in the system, so you're already in aged care, those new changes shouldn't affect you.
Olivia, it sounds like there is a lot to talk about with regards to aged care changes. Will you come back in later this week and maybe take us through some of that?
Would love to.
Olivia Maragna, a financial advisor from Aspire Retire, and we will talk to her before the end of the week to get some more details